What's up, all y'all negative Nancys out there? Just wanted to let you know that Alberta came surging back with some employment over the last little while. And we are now seeing a unemployment rate fall from 7.8 to 6.5, which is absolutely fantastic news. Alberta actually increased its employment by 29,000 jobs last month. And when we start to look at this chart here, we've actually seen a pretty nice little decline of unemployment rate. It was elevated, it's still somewhat elevated, don't get me wrong, but we are now somewhat in line with where we have been back in 2018. So with that in mind, this is pretty exciting for us to see Alberta is still growing. And a large portion of that is actually full-time positions, which is more great news. So if you want to read the article, I'll link it in the description below. But this video is about the apartment market. If we're going to see a crash in Calgary, the apartment market is most likely going to lead that charge. We are down 7.2% from last year, which is $28,000. We're down about $9,000 from last month and over 10% now from the peaks that we saw in August 2024. So we've stepped out of pullback territory into correction territory. If we see this get to 20%, that's kind of crash territory. So we'll see how long it takes to get there, if at all. But my name's Fyfe, your Calgary real estate agent. I like to provide as much information and value as possible. Click the links in the description. There is a lot of things for you to consume. It's free. You don't need to give me any sort of information unless, of course, you want to see what homes have sold in your community. Then you can either comment sold homes or just reach out, click the link, and go from there. So let's read what the Calgary Real Estate Board has written about the apartment market. If you want to read it on your own, skip to the next chapter. That's totally fine. This sector has struggled the most with excessive supply. November sales dropped to levels consistent with long-term trends, but new listings remain elevated and November inventory levels hit a record high for the month. The months of supply edged near 6 months and has been sitting above 4 months since the summer. This has resulted in relatively persistent price adjustments throughout the second half of the year. As of November, the unadjusted benchmark price was $309,000, 7% lower than last year at this time. Year-to-date declines was just over 2%, with the largest declines occurring in the Northeast at nearly 5%, and the only district to see price remain flat was the West. So the West is still holding year-over-year prices, but the Northeast is absolutely getting smacked, like in most other property types as well. They are struggling with a huge amount of new construction, as well as a lot of investment, and a lot of investors seem to target the Northeast, and when markets start to shift, they start to panic, and all of a sudden they start to offload the property, and the snowball starts in the Northeast especially. So when we start to look at this, this is the last 7 days. As you can see, today is December 6th, and we are just looking at the last 7 days here. And just a quick snapshot of the apartment market. So you can see that there was 115 new listings, about 87 price reductions. There is 86 units in the entire city that are pending and about 84 sold, with 125 expired and 65 terminated. So what we can see is demand is still there, right? You got about 160 units sold in the last, let's call it 7 days. But when you're starting to look at the price reductions in the new listings, it's just, we're still getting a lot of new listings come to the market, which is increasing that level of inventory and allowing buyers to really just take their time and find properties that best suit their needs and really find the buildings that have the best possible condo fees, location, layout, features, amenities, all that stuff. So I think what we're going to see continuous throughout all of 2025 is a lot of sellers just not really get with reality when it comes to their building and really just trying to inflate their price compared to what they've seen over the last 3 years. It's going to be a constant struggle all throughout the year. So let's just start to dive into these numbers a little bit. Now, when we start to look at this, this is the total city apartment market. We're seeing a pretty nice trajectory down in terms of price, right? We've started seeing the dips in April, May, and they've been fairly consistent. And I don't think they're really going to slow down too much going throughout the winter. We have seen a lowering of the inventory and a slight lowering of sales, which is great to see, right? Demand is slowing down, but also inventory is also coming down as well, which is going to help soften some of the price declines as a city as a whole. Now, when we start to look at sales, this is where it gets interesting. Still very elevated compared to what we've seen over the last, let's call it 10 years. But when you look at the last, let's call 3-4 years, we are greatly declined from what we witnessed through that seller's market. Now, when we start to look at the price points, right? Again, looking at those last 3 years, look at all the sales under 300,000 and even the 300,000 in general, right? We are still seeing the 400, 500, 600 have some small sales, but the biggest declines in the apartment market is just those lower price points, right? The more affordable price points. I would argue that a high majority of these sales were investors looking at Calgary, seeing the growth that Calgary had, the low amount of rentals, and really just dove in, right? Without really doing a lot of research. From my personal experience, I would say 60 to 80% of them didn't even come to Calgary, didn't know Calgary. I shied a lot of them away from the market just because it doesn't really make sense to me for someone to invest so blindly into another city. But I could imagine there was a lot of real estate agents out there that just pushed that product, right? I even had transactions, I've heard of transactions of real estate agents from Ontario suggesting Alberta and somehow getting involved in the transaction and, pushing the product because Alberta was going through a crazy boom. So I would imagine that a lot of these sales were the investors. Very interesting market to be a part of. Now, when we start to break it down and look at the listings have stayed elevated, right? Year to date, new listings around the same as last year. So we haven't really seen a huge influx of new listings, but a softening of the demand as a whole. Now, this is very evident, especially when you start looking at the communities that have new construction. And a lot of new construction is definitely coming to the market. I should have looked up how many buildings are being built in Calgary. I don't know if there's actually gonna be a number there, but there are thousands upon thousands of units being developed currently, which again is probably going to continue to push this price down in the city as a whole because we're going to see a massive amount of new units come to the market. So when we start to look at expireds, right, this is kind of an interesting one. This is just more or less the number of expired listings for the month, okay? And I just want to pay attention to how wide this gap is getting, right? So you can see, over the years, we have had wider gaps, but they are typically a lower number, right? So you can see this about 350. You can see this wider gap in 2021, 2022 was about 280, 300. Now we're sitting above 400, and it's probably going to stay elevated and most likely get a wider gap of expired listings as people price their units for what those prices were 6 months ago, really trying to get as much as they can from that home, but then in turn hurting themselves, going on the market a little higher than what they should have been, and actually going in at more of a competitive rate because there is still there's still demand out there, but they are looking at the market and they're smart enough to realize when something is overpriced and they have a building 4 blocks away that has more amenities, lower condo fees, newer, better views, whatever. You really need to be careful when you go on the market in this market in general as a seller. As a buyer, take your time, go look at a lot of buildings, figure out what's the best fit for you. Now, when we look at the expired listings again, when we compare it over the last 10 years, you can see 2016, 2017, right? We actually have now seen year to date the amount of expired listings go as high as the most depressed years that Calgary's seen in quite some time, right? 15, 16, 17, 18, we saw a big slowdown in the real estate market, and we're already there. We're already there for the apartment market, seeing those expired listings reach those numbers as what we saw before, and we're probably gonna see them exceed that because we went through that crazy boom, right? 2022, when everything was affordable, there was less than 2,000. Now we're getting upwards of 35, 3,600 units. Right? So again, just something to keep in mind when you're going on the market as a seller or as a buyer, just waiting for those right opportunities. You can probably hold off and wait for the right one to pop up or wait for that one unit to be on the market long enough for you to then get a good deal. So with that in mind, very obvious that we are seeing an increase in the months of supply. We have now again set a new record, right? The month of October, we saw it dip down just a little bit, but now we're right back up on that trajectory. If we look back here, we were at the same as what we were going through 2021 and not quite as high as 2020 yet, but we'll absolutely get there as we go through the year. So when we look at this here, this is an interesting one. The only real things I like to look at here is the days on market, which is 59 days, right? Up quite a bit from last year, about 14. We have our benchmark price of 309, which is tied to attributes. Again, the link is in the description. If you want to see what the attributes are for each individual quadrant, go and click the link in the description. You can see what those are. This is total city 309. So you got to look at the composite of the entire city. You can see that the median price or the price rate in the middle is 209, and the average price actually, oddly enough, is up quite a bit, right? Looking at the last little while, you can see that the average price is up quite a bit from the last 6 months, but the benchmark attributes are actually down considerable over the last 6 months as well. So more expensive units have sold in November, but those expensive units have pulled down the attribute price. So we got to make sure that we're looking at that throughout the entire city, not just the composite, but the different quadrants, communities, stuff like that. Now, when we look at the current days on market, so the days on market in the last video was 59, right? So that was just for the month, and that's the days on market. But current days on market means that if you go on the market and you expire, you terminate, you pull off the market, and then you put it back on within 15 days, there is a current days on market. So as someone who's looking on realtor.ca, you'll only see that days on market, but you don't see any history, where the current days on market will add the history as long as it's relisted within 2 weeks. And you can see that in the long run, we aren't as high as what we have been in the past, but we're higher than what we've seen in the last little while. It's pretty common for us to see the current days on markets peak in Q4, but now it'd be interesting to see just how high that current days on market, as we see more expired listings come back on the market within 2 weeks, continuing to try to sell and then sell after 80, 90, 100 days. And the average current days is definitely going to increase here. So a lot of signs pointing to a slowdown in the market, especially when you start to break it down into the individual quadrants and you can see months of supply, even in Southeast, which is a fairly sought after area, seeing a lot of new construction. Rangeview, Seton, Mahogany, right? They're seeing a lot of new construction, and now you have 7 months of supply, right? 6 months of supply, which is absolutely a buyer's market, Northwest, Northeast, and East Calgary. The fastest moving market is still in buyer market territory in West Calgary, right? They have 4 months of supply, which is still like a buyer's balanced, but it's definitely buyer leaning. So these are very clear indicators that we're going to see continued price pressure, downward price pressure in all of these communities at the end of the day. But you can see that the South and the West are just holding up a little bit better than the other quadrants of Calgary. Now, let's look at the actual price decreases. You can see that again, Northeast right here, they have seen a 12% year-over-year loss compared to November of last year. I should have actually wrote that down and seen that actual price point, but we can go and look at this next chart here and it should show us a little bit. Everything else is hovering around that, 7 to 8%, which is still a pretty big loss, right? And if you have that consistently over a long period of time, we're definitely going to get into crashing territory. We're in correction right now, which makes absolute sense. And, I wouldn't be a bit surprised if we continue to see this drop down 20, 25% by the time we see the bottom. We have seen this time and time and time and time again. Calgary has gone through this so many times with apartments. I don't know what it is, but we have a boom. We have a pretty big peak spike up. There is buildings that did not reach the 2007 prices, and now we're falling again. Okay, wrap your head around that. There are buildings that barely reached the 2014 prices, and now we're dropping. So 2007, 2014, 2023, 2022, I would say 2023 were those peaks, and now we're going back down. So when are we going to see that again? 2030? 2032? What's going to happen in Alberta for us to get back to 2007 prices? Okay, crazy stuff. Absolutely wild. I do not recommend investing in apartments in Calgary unless you're going to do some sort of Airbnb, self-manage it, or get a professional manager if you have multiple units. Right? There is a lot of vitality. There is a lot of risk when going into the apartment market. So if you want to know what your neighbors in your building are selling for, it's free. I'm not going to harass you. Comment sold homes, or there's a link in the description for you to register for this as well. We can help set you up. You can go on a weekly, monthly, quarterly, annual basis. Doesn't matter to me. I'm here to help. Let me know how I can do that. If you want to know what your home is valued at, your apartment is most likely falling in value. How much is it falling? What is your plan? What is your renewal plan? Are you planning on exiting out of that property? Are you going to put it on the rental market? Whatever the case might be, there's a free home evaluation tool, links in the description. Go and put it in there. Again, I'll call you, I'll help you, I'll chat with you. Hey, how's it going? What can we do to better this situation? It doesn't always mean selling. There is other opportunities that you could go through and try to get this over the finish line, create some spreadsheets, have some conversation, and go about and doing that. You can scan this QR code as well if that's easier for you. So let's actually break this down a little bit. I recycled the chart from the other market report. So there's a white blank here, but you can see everything is in that 40s, 50s sales and listings ratio minus the 75% that we saw in West. So again, it's still moving. It's still moving relatively good, but they did see a almost 8% year-over-year drop, which is very average for what we've seen across the city. And they're still seeing, looks like, where are we here? They're still seeing a $7,300 decrease from last month. So even though they're holding up well, they're still elevated in price point compared to much of the other city. So they are seeing the price slowdowns, but that just means that if you're a buyer in this area, you have to move a little bit quicker. right? If you're a seller, you can be a little bit more lenient on your list price, right? You can have a little bit more flexibility, especially if your building is turning over a little quicker than other buildings. So you need to dive into these numbers and look at what is going on in your area, building, community, and then start to make some decisions from there, right? So we are seeing price decreases all across, especially city center at $15,000, which is huge for a apartment that's only worth $315, okay? Massive decreases. So we have seen constant price reductions, year-over-year price losses since Q2 of 2024. We have noticed a little bit of a slowdown. They are obviously still 5-7% price reductions, but you can see just the crazy trajectory that we've lost super fast every single month. Now it's starting to flatline. Are we going to continue to plummet? Probably not. We're probably going to stay somewhat consistent at 5-8% year-over-year loss. I don't know how long that's going to last for. The apartment market is very volatile. That was the word I was looking for, volatile. And it's interesting. It's very, very interesting. You can see the average year-over-year price change, like the average this month, oddly, was more than last month, but that could just be an anomaly. I wouldn't really think about that too much because you see the average over the long term has been lower. Now, we are down and down and down. We saw peaks in mid-2024. We had a little bump in 2025. How low are we going to go throughout the year? That is a amazing question that I wish I could answer. But all we can do is watch the data, look at individual quadrants, look at individual communities, and figure out how this is going to best position yourself for success in this market. Are you going to ride it down and try to find and get renters, or just not watch these videos and just go through the market, go through the motions, pay down your mortgage as fast as possible so you pay less interest and just ride the wave? Are you going to take a loss and make a move of some sort, consider the closing costs, consider the interest you have to pay on your mortgage? I really hope that if you bought in the last 2 years, you are not watching these videos, that you are going to ignore me and and pay attention to your asset itself and not worry about what is going on in the given market. That's going to add stress and confusion to your life. Don't do that. If you need spreadsheets to keep track, let me know. I have spreadsheets. I can work with you. I can help you figure out how to get through this annoying time, because there was a lot of people that bought in these last 24 months. And that's okay, because if you continue to just grind it through, get through the market, pay it down, cut your losses if you really want, or just really focus on that investment that you made the decision for, then we need to go and figure out how to get you through that. So that's a little rant. Thank you very much for these videos. Again, I'm here to help if you need it. Don't listen to all the negative Nancy's out there. Look at the data, look at your building, look at how you can get through this, intelligently, and figure out what you can do to just find some comfort in your life. So thank you very much. We'll see you on next week's video of townhouses. So backwards, peace.